Okay, let's take a look at the S&P 500 real quick and the overall market. I'm going to talk about a little bit on gold, a little bit on BlackBerry, a little bit on tech, and a fair bit on semiconductors. So, S&P 500 seemingly wanting to come back up. We'll see if it holds above the T line here, but my overall impression is that it would start heading back down. But we'll just have to wait and see because, who knows how long this consolidation period could last. So let's take a look at the semiconductor index. Man, what is up with the internet right now? Speed test. Okay, so while the speed test is going on, I guess I'll... Oh, okay. Okay, so the semiconductor index showing 2 dojis, which is a pretty good sign that it may reverse. The fact that it's holding above the T line, we might get some a T line crunch is what they call it. If we manage to stay above that, we could continue this T line crunch all the way to the top because we still do have some headroom. I do have a mark here for 1,000 because that's a huge psychological barrier that you can see that has been trying to break for the past 3 days-ish. So the second it breaks above that, I'll be very interested to see what direction all the semiconductors tend to head in. So semiconductors that I have in mind is Qualcomm, Intel, and Nvidia, and AMD. So if we can get these, if you were to take a small position on the break of the 1,000. For the semiconductor index, then we could be in a pretty good position to make some pretty good profits. But what does bother me is this head and shoulder formation that's starting to happen on AMD, which head and shoulder typically is a negative sign, a sign that it may reverse. What's interesting here is that it is holding the trend. If you look at intraday on AMD, you can see that it went down here and held the support the whole time. And it's been doing that consecutively for like the past week and a half. So it's a pretty good sign that it is going to continue to hold this trend upward. So AMD, I'm not too worried. If something does happen, then you can scale your way out. If it does manage to break below this, if it closes below this line, then I'd be worried. And your next barrier is going to be somewhere along the 50 moving average, if not the low of this candle. So we'll just have to wait and see where it would find some support again. So as far as AMD is concerned, that's all I'm going to say on that. Let's say tech, very interesting stock to look at, considering buying a position into here because you've got this exponential cross with the simple moving. You've got the close, a potential close above the T line, and holding up the small trend here for the bottom here. So who knows? My impression of this one is that it's going to start heading back up. You do have whoa, why is this looking like that? Let's do 6. Come on, there we go. Okay, so you do have this crossover here on these stochastics right here. So I am kind of intrigued to see because it is oversold right now. So I am curious to see in which direction it's going to take. If I can find the RSI on this one, let's see. Oh God, whatever. I'll probably look at the relative strength index later, but I am curious to see how it's going to do and where it's going to find a resistance on the way back up. My impression. Ooh, I need to move this actually. If it manages to close, let's just do that just to set a reminder. Later on today, but point is, tech, in my impression, is going to head back up, which is a really good thing because your profit margins are pretty ridiculous if you take it all the way to the top. But do bear in mind that we have not Fibonacci extension on retracements. I would say somewhere around here. So let's do like from here to here. Your next point of resistance, at least on the Fibonacci, for the 78.6. You're looking at 2138 in terms of dollar amount for the 78.6 retracement. So, and your profit margins are about 4% before you start figuring that there might be another consolidation period. So, this is where you would probably scale out, wait for it to come back down, and maybe pick up a few more shares if you think it's going to head back up. If you've got like this a flag signal, a combination of a few flags that are indicating a little reversal there. But the fact that it's closing above the T line is a pretty good indication that it's about to head back up. So I do have my eye on tech. Now let me get rid of this Fibonacci. It's a little distracting right now. Let's take a look at gold. If you remember, a couple weeks ago, I kind of thought that the gold was due for a little turnover, especially at the 200 moving average here. It was either going to be make or break, and in my opinion, with the doji and this bearish candle, I was like, okay, well, this is going to turn around, especially if it closes below the T line, which it didn't, but then it ended up opening way lower and didn't succeed in opening a little higher. So this is kind of your confirmation that the that the exponential moving is starting to head back down. So one that you should look at would be JNUG and NUGT, because both of these kind of follow one another and would tend to head back up. So, this is your T line, so hopefully it'll kind of open above that. So I'm going to create an alert right here. So hopefully you understand why we've got this going on. Let's see. OCLR had another successful day. OCLR. Oh, and another note on JNUG versus NUGT. It's purely priced. So a lot of people tend to like JNUG a little bit better, only because it's priced a little lower. So your profit margins are pretty ridiculous. From here to here, you're looking at 113%, which is really ridiculous. Like if you bought down here, if you saw this signal, if you bought at the T line, like if you're following that kind of mentality, if you bought here at the end of the day because it closed above the T, then you're looking at, I'm trying to find a spot where it closes below the T line, because that would be your sell signal. So like right here, that's kind of your sell signal. So you're looking at 70% right here, and then you'd make another purchase here, somewhere in these two flags. I wouldn't buy here just because it kind of looks like a doji. But on this day, it did open low, closed high. Maybe at the end of the day, somewhere around there, you buy, and then you've got a doji. So you kind of have this sell signal here. So you're looking at 40% in about like 6 days or something. So that's pretty ridiculous profit margins, especially for JNUG. But JNUG and NUGT, depending on which one moves first, then you might be looking into different types of sympathy plays, rather. So if NUGT starts moving up, then you can logically expect JNUG to follow suit soon after, because they tend to follow one another. Let's take a look at what was the other one? Oh yeah, BBRY, BlackBerry. If you remember, a couple weeks back, you know that I don't trade too much on the fundamentals, so I was purely looking at charts. So right here I had a predictive buy signal if it started heading back up, but it didn't. So you kind of end up selling right here because it kind of failed. So this, you got the crossover right down here, you got this consolidation period because you got this continuing trend on support, and you could have bought here and then work your way back up. So who knows, it might run into some resistance right here on the on this trend line, but you got overall it's an opening wedge pattern, and it needs to meet the overall trend right here. Because this is the long-term trend, so it does run the chance of running all the way back up for a total of 10%, which is really not too bad for the amount of time that your position is in there. What else do I want to say? Oh, another point of resistance could be the 50 EMA right here. So I mean the 200. Is that the 200? Yeah. So you got the 200 simple moving average. So I tend to use moving averages that a lot of traders use, because if I'm using the same resistance that they use, then it'll be easier to predict where it's going to find some resistance. What else? I think that's all I really want to talk about. Oh yeah, Under Armour. Under Armour was showing some potential recently. Like I said, Oh, I keep having to have to move this box because I'm waiting for the breakout here. But as soon as it breaks above the T line, I'll probably make a purchase just because the profit margins, you see like 12%, and maybe you'll have a gap fill for the 39%. So this one's looking pretty good. And being a popular stock, it does tend to trade fairly high in terms of volume, which is really good to avoid that kind of volatility. I do like some volatility, but not an insane amount. I know SHIP, just out of curiosity, SHIP had an earnings report. Oh, yeah, it did end up dropping. I kind of figured, because just a combination of things that were happening on that day. OCLR seems to be doing pretty good. Anyway, I think that's all I'm going to talk about for now. Good luck.